inflation does include ticket prices and travel prices. I got Tom White with me here in studio and Paul McCarthy joining us from Kisco Capital as we look at Delta earnings this morning. Is there a connection, Paul, between some of the strength we're seeing in the corporate spending at Delta and the inflationary forces in the economy?
Well, I think that, the interview this morning with Delta CEO, they're seeing business travel come back pretty strong. And they did mention in their report that they don't think that that's going to stop anytime soon. And maybe part of that's just like a post-COVID type of behavior. And they think that that's going to continue. But they don't see price getting in the way of business travel right now. And they actually are looking at more premium travel within their cabin to sort of capture more margin and revenue. So it seems, at least for Delta anyway, things have been, pretty strong. The only areas that a weakness really, they say, is China really hasn't come back online yet. They don't expect it to anytime soon because that economy is weak. But, you are seeing people continue to travel. Really a lot of their metrics that they reported this morning were quite good. So if inflation is stopping, people from travel, we're not seeing it, at least with Delta Airlines anyway.
It seems like not only is it not stopping it, the two things might be feeding into one another. When I think about the inflationary data in the services economy, Tom, it's like I think these two are pretty wrapped up to some degree. They're gouging us for prices. Flights have been expensive. I don't really think these are two separate things. It seems like we are getting a real strong corporate bid into travel, and that's something that we didn't have for a while post-COVID. It's really kicked in.
Yeah, and that's where they make most of their margins on that, and international travel, which continues to ramp up at this point also. So you can charge whatever they want, offsetting some of those rising jet fuel prices also. So that's a bonus for these companies. Now, what's the headwinds? Boeing not delivering planes.
Doesn't help.
Yeah, they can't increase capacity at this point, even though demand is above 2019 levels as far as TSA data.
Yep.
So looking at Delta post-earnings, well, implied volatility has been crushed, right? Because event risk is gone and the stock's up post-earnings. So that helps. So I looked at a strategy here that goes out in duration. I went out to the September monthly cycle. So instead of buying the shares, I looked at a strategy that takes advantage of a move higher where you don't need a massive outsized move to the upside, staying risk defined, offsetting some costs. So look at buying a call vertical where I'm going to buy a slightly in the money call, the 47 strike, and then against it, sell the 55 strike call because maybe I think it's going to go up, but maybe not get above that 55 level. Remember, the 50 level has been resistant over the last few years since that COVID fall. So that's going to be a concern. If it gets above there, how much more does it have to go? So buying the 47.55 strike call vertical, paying roughly about a 340 debit for that. That's going to be your risk, $340. Takes your break even to $50.40 over the next 163 days. So you have that duration built in, that break even about 3% above the current share price in Delta. And buying verticals like this, Oliver, that take a directional bias, whether it's a call vertical like this or a put vertical, because implied volatility levels are lower, it's going to cost you less to get into that directional biased position. But still risk defined, offsetting some cost by selling that 55 strike call against it because there's still some extrinsic option premium in that 47 call that you bought.
Well, you're basically betting by selling the 55 that we're not going to make a real earnest push back to the COVID highs. None of the airlines are back to pre-COVID levels, even though one of the cruise lines got there. You know, it's possible with Royal Caribbean, as we saw. Paul, what do you think should be in our framework when we think about this group generally? I mean, is it will we one day see airlines trade above their pre-COVID levels, or is that now like fully behind us?
Yeah, I mean, Delta last time was 2019. It's trading around where it was in 2014. But, its PE is like mid-single digits now. So you got to think that maybe some value investors might come in and look at the stock at this point. But their peers in general aren't really generating positive cash flow. I mean, they did $1.4 billion this quarter. That's a big outlier. So, it's possible that you get, one stock is sort of an allocation for investors. But, I think that the main two things that you see with airlines over time is just labor and then fuel expenses. Delta, about 12 years ago, bought a refinery. So, as you see, so they get some benefit from that. But most of the other airlines, that can cut right into their profits. And as you see commodities prices keep rising higher, maybe you see oil over $100, this summer. And so most of the airlines, it's a big mishmash as to how they hedge that. So there's a lot of, that's where the inflationary forces sort of, I think, keep valuations or multiples lower in this sector. So, maybe there'll be some differentiation as the year goes on and Delta, pays down some of their debt. A lot of the coupons on airline debt is 4%-ish, and that's going to probably double over the next 3 to 5 years. So that's weighing on the sector as well. So, it can be done as Delta is showing it, but there's sort of a best in class by a far margin.
Yeah, true. It seems like some of the efforts they're making in cabin as well to free up more margin is a way to help free up cash to pay down some of that debt. Market seems like they're the best right now, giving Delta essentially that kind of premier leadership quality. It sounds like you agree with that, Paul.
Yeah, for sure. I mean, they're making their cost of capital, and if you look at the airline sector, they continually take trips to the bankruptcy court because they don't do that, and so Delta's at like 13.8%. Their cost of capital is like 8%. So and it's a high hurdle, but it's a very capital intensive business to run, and the management teams make a big difference as whether they drive money down to the bottom line or not. So it'll be interesting to see how it plays out over the next 3 to 6 months. Because we're seeing so much noise, especially with Boeing in this sector. And the Delta CEO this morning, when he's being interviewed, they have an order for the MAX 10 that he's like, I don't know when it's going to come. It should be 2 years, but it could be 3 or 4. We don't. He didn't seem to care at this point. So they fly Airbus equipment as well as Boeing. So they're not so tied to Boeing, and they haven't really taken delivery of Boeing planes for many years. So
very good point.
There's that going on as well for this sector. So a lot of noise.
Great stuff. Love that point, Paul. Good setup for us, too, because we're going to take a look at the Boeing options here. Thank you very much. Paul McCarthy, Kisco Capital. Tom, give me Boeing trade real fast. We're below 175.